Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis methods to the market indexes, starting by S&P 500 index, then followed by Dow Jones Industrial Average, as well as the Nasdaq index. Okay, let's start by the daily charts of the S&P 500 index, and this rally you may think that the index is in a major uptrend, which is not the case. Let us zoom out a little bit. You will start getting the bigger picture where you can see that the index is just correcting against a down prevailing trend. Let us talk about some history before we dig deep into the short-term details. Once upon a time, there was an uptrend over the long term, and this uptrend ranged from, you can say, July 2020 up to 2022, early 2022. A double top formation caused the impulsive wave, the final impulsive wave, to change into a corrective one. But at the same time, there was a bigger head and shoulders being made over the weekly chart, which caused the whole trend to get into a bigger problem, and reversal took place from uptrend to classical and valid downtrend. The new major downtrend was verified by lower highs as well as continuous lower lows. Therefore, the environment changed from being bullish to being bearish and negative over the long term. Let us get into the final trend, which is, of course, the falling trend, lower highs as well as continuous lower lows. And here is our downtrend line as well as down channel line. We can see here the index started to correct upwards in a short term move, and this short term move is expected to stay short term. The first resistance is around 4,180. It's a short term daily resistance, followed by horizontal weekly resistance around 4,245, and finally the downtrend line is running through a resistance at 4,300. So we can notice that the index is going to face a triple resistance zone ranging from 4,180 up to around 4,300, maybe 4,350, which means that the thickness of this area may be around 150 points, and the outlook is bearish as long as the index is within this area. And as long as the index is failing to close above the downtrend line, things are considered over the major and the medium term, they are considered bearish, and the selling pressure is expected to appear at any given resistance that we have just marked in few seconds ago. So keep in mind that the correction taking place now is just a correction. The structure of the index is bearish. Even the impulsive wave over the medium term is still downward, and it's just a couple of weeks of correction, which means just around 10 to 20 trading sessions that are just correcting to the upside, which means that the negativity of the long and the medium term is still valid, although the market is correcting for around 2 weeks ago, for around 2 weeks now. Okay, this picture means that your strategy over the long and the medium term is still on the short selling side, and those who think of intraday different point of view, let us help them by checking the intraday chart. I prefer the hourly chart, and here we can start drawing the details of the intraday ultra short perspective, and here we go. This is our intraday structure of the market. You can see clearly that there is an uptrend consisting of higher lows as well as starting to make higher highs. Okay, all of this is over the intraday ultra short time frame. We do have some kind of support around the 4,015 points, and the trend, the ultra short trend, is running through 3,980, which means that this area of around 30 points will be considered a zone of support for the intraday speculative traders who wait for any short-term correction to start to initiate new ultra short-term trades. Any break for this area, which is considered bubble support, will be a signal that the ultra short-term speculative trend is over, and it may also indicate the reflection of the index from one of the major resistances that we have just drawn in few minutes ago. So keep in mind that it may help you to put this number into your memory. 4,000 points should not be broken in order for the ultra short term trend to continue, and if it did broke to the downside, this means a kind of reflection from a bigger time frame, indicating that a bigger resistance may have witnessed some kind of strong selling pressure, leading to the break of this ultra short term corrective trend. Things are more clear now. In order for the bearish environment and the negative structure of the market to change, the S&P requires to break this downtrend on weekly basis with a close above this broken levels, maybe a week or two. Only then we may say that the environment started to be neutral, maybe positive, depending upon the style of break as well as the style of the confirmation. Until then, things are corrective unless proof otherwise. Now let us check Dow Jones Industrial Average. You can clearly, in 1 second, say that things are going identical and the change is only in the numbers. Take a look here. The major picture is bearish, similar to the S&P 500 index. Things are going into a classical pattern of lower highs as well as lower lows repeatedly. Now we are moving in the same style of correction to the upside. This correction is short-term lived against a prevailing downtrend. Again, the same style of horizontal resistance, weekly one around 33,600 points, and it's a double kind of resistance at the same level the downtrend is running. So we can say that the area of resistance is ranging from 33,200 points up to 33,000, maybe 650, maybe 33,700 points. The same structure, nothing changed, almost identical. It's just a number of what changed between the Dow Jones Index and the S&P 500 are just numbers, but the structure is identical. Even the correction style is identical. The same with Nasdaq. We can see here the downtrend is also more clear than the other indexes, consisting of what we have already said, lower highs as well as lower lows over the major term. And here goes the short-term correction to the upside, and we can see also the major weekly resistance around 12,950, and it is a joint resistance here, but the trend line itself is lagging a little bit in August, and its resistance is running through around 13,300 points. The same, the indices are all moving in the same structure, which is a major confirmed and valid long-term downtrend and a short-lived correction against the prevailing trend. All indices are having a little bit short-term rallies to the upside, which may be a very good chance to wait for them to start testing or hitting or reflecting from their respective resistances in order to do some virtual trading and wait for some virtual trading signals to appear to go short with the prevailing major term trends. That's it for now. See you next time. Please feel free to like, share, and subscribe. See you soon.